Good afternoon, everyone. It's Chris from Axel as well as Solstice. Happy 4th of July to everyone and hope everybody's enjoying the long weekend. I want to go over some setups and the overall market to help you out understand the risk involved in the coming week and to understand levels. I'm going to show you a couple of little small tricks that will help you increase your trading goal, as well at the same time understand the risk and expected measured move on any chart that you trade in any instrument. First of all, you can find us on Axel, ATRAI. We are an investment private company that specialize in the equity, commodities, as well as development in real estate. You can get a hold of us at joe.axel.com. You can find us on the YouTube channel. Sometimes the YouTube weekly video sounds a little bit gibberish if this is your first time listening to the video, but you have to take some time to learn the technical setups and understand the risk involved when we are trading an instrument in order to make a better profit and positioning yourself in an equity or a commodity or crypto, whatever you trade. And last but not least, you can find us on X at the same time, and you can get a hold of us on X and get a message out to me. Let's go to the first slide that I have up here. And what I did, I put the S&P 500. You can see State Street S&P 500 electronically traded fund. You can see I have the monthly 10-year outlook on the chart. And the reason why I did this, I wanted to show the uptrend from the 2020 uptrend channel, the 50 simple moving average. This is the 18. We are far away from the 50 as well as the 18, but on the monthly, every time we got close to the 50 and the 18, we rebounded sharply as well as the 50. And here we tested it and we are in continuation to the upside. But I wanted to show you that we had the 2 weeks ago we had the up week. We had a short week last week, and this week was a short week because of due to the 4th of July holiday. I consider this like a double top. It looked a little bit above, but we closed inside. But if you look at this bar and this bar, we closed a little bit slightly above the 50% of those two bars, and we are holding the 5 simple moving average between the 5 and the 20 or the 18. You have a 12 simple moving average on the monthly to pay attention to if there's going to be continuation to the upside. Let's go now take a look at the weekly chart. And what I wanted to do is show you the 3-year weekly on the chart. I hope, TOS is still working correctly. We don't have a problem with it. It looks like it is working. We came at it, that this was the April low in 2025 to the high December. We eventually looked up in January, February, fell back down in March 30th and went back straight up. But we are consolidating in a downtrend channel as well as symmetrical triangle. This is considered a diamond, but we had an inside bar of the prior week because we looked above and failed, but we closed right inside that level at the 744.78 on the SPY. I want to show you how to look at the measured move, understand how to look at the option, and understand the risk involved, how to look at these levels without being any biased. So let's go now from the daily chart. I want to show you the on the daily chart now. Let's go to the daily, and I want to do linear regression uptrend channel as well as downtrend channel. You can see from the March 30th, we had this gap. We had this minor gap which we filled. We continued higher. We filled this minor gap up here with this move down, looked above, but we are in a downtrend, and you can see that downtrend channel. We came tested this area here where we broke out of that 720 area. We retested it and rallied back up, but we closed inside on the weekly bar in a decent level. It doesn't mean that things are starting to break, but we're creating lower lows and lower highs from the top. So this is very important to understand that the 50 SMA on the daily still holding us in the 18. But if we end up losing the 722 area, that's going to be a concern to me. And at the same time, understand how to do the measured move. So what I want to do, go to the daily. And what we want to do on the daily, take it down to a 20-day, 4-hour chart. And I wanted to use something very simple. You can see where the machine grabbed the Friday low to the high, that wick on Friday when we rallied up from that bottom. We continued higher, but we closed inside on Friday on a bearish zone, but they brought it back up. Remember, this was the holiday on Thursday because due to the 4th of July. So what I can do is take the high for the week. And what I would do is take the Monday lows instead of this low here. I'm going to take the Monday's low and show you this is the expected move to the upside and downside. And what I want to do is teach you how to look at the SPY levels and understand the option chain in relationship to this measured move. But I'm going to keep this here. I want to go over right now a couple of different tech sectors with the semiconductor and come back to the SPY. So let's go back on the daily chart. We're going to go back to the daily 1 year. And the reason why I wanted to do this, I'm going to keep this here. We're going to go to a 6-month outlook instead of, that long time frame here. You can see it's a 1 year. You can do a 9-month, 3-month, 6-month. 6 months should be sufficient enough to show you the levels and the breakout on the chart. Let's take a look at right now the semiconductor SMH. And if you want to evaluate the semiconductor SMH, you can go to the analysis tab, and that way you can read the data on the SMH, because due to the semiconductor, we fell below the 18 SMA. You see, we looked above and we fell back in. We almost tested the 50 simple moving average, which is a reference point for support and resistance. So we are that 578 is a very important area in this. In case we continue lower, we fall to the F3, and that section here where we had the gap, there's low volume on the profile. I'll go over some of the volume profile, how to use it on a technical level. This is in the semiconductor, and this is basically the Vanguard fund. Let's take a look at the XLK, the tech sector. XLK. And what we can see in the XLK, we are in that symmetrical triangle. We do have this gap up here. You can see we're creating lower highs and higher highs from here. We did held the 50 SMA and that double bottom. If there's going to be continuation, that's great, back to the upside. And if we end up losing the 50, I'm looking for the backside of this channel and the area here where we can find some support on that gap from the move here, rally up, come back, retest the breakout, go higher, come back in that area, rally up, come back in, but we created lower high. So we are paying attention to the 50 simple moving average. Between the 50 and the 200 SMA or the 116 SMA, there is an 83 simple moving average, which will meet, if I do a drawing up here, it will meet that gap down here in the XLK. Let's take a look at the IWN. I'm going to use the value for the Russell 2000 to show you that we were in that range up here. Then we eventually broke out, came back, retested this range, and we grinded higher in the last 7-8 days in creating a new high. But on Thursday, we sold off, but we stayed in that range. So this is very important to pay attention between the 18 and between the 18 and the 5 SMA. There's a 12 simple moving average, which we retested and held. If we end up losing it, we'll look for the backside of this channel in this consolidation where we came out of that move, and it'll be between the 50 and this is the 50, this is the 18. There's a 32 simple moving average, and that will meet the F3, the 38.2 Fibonacci between the high and low on the charts on IWM. Let's take a look at the IGV. And I wanted to show that the IGV in the last month and a half, when we called this area to go long, we rallied up, we fell very sharply. We tried to recover. We got an island reversal here, which is a gap, and there's another gap in here. I am paying attention because it had an inverted hammer. It doesn't mean that we are gonna fall. This was the consolidation before the breakout. You can see it. We came back to that area. If it creates a rounded bottom here, like a cup and handle or an inverted shoulder, there's going to be possibility continuation to the 50 simple moving average and the 61.8 to come back to this area where that original breakout happened, up in this area and coming back down. It does not mean that we are out of the woods. We have to pay attention to the Federal Reserve Board, what the rates are. Let's go take a look at right now. And what I wanted to do, show you here, SP dollar sign, sorry, dollar sign SPX letter A. And I want to show the 50 simple moving average. I'm going to go here in the style, in the studies. I'm gonna in here show you how to do the daily charts on that chart because it's not gonna look great here. And I'm gonna show basically the breadth of the S&P 500 on the 50 simple moving average since I loaded it up. And what we're gonna do instead of using the candles, you can see this is candles. I'm gonna use a line to kind of give you an overall view between the, you can see the 50, the zero point 0.5 up here. If I draw a straight line up here on the 50 simple moving average, we are at 66% of the S&P 500 are above the 50 simple moving average in the S&P 500. And the breadth of the market, you can see the ratio is positive on the overall market on the 200, on the 50 simple moving average. If I change this to the 100, I want to show the difference between it. So you can see here we have 64% of the S&P 500 holdings on the breadth of the market, and the stocks that are in the S&P are above the 64% or 65% of the S&P above the 50% of the simple moving average. This is something which is a small tool that will help you understand the overall market. Right now, I'm going to go back to candles. And I want to show you a little trick to do. We're going to go in the style here, go back to candles. And from the candles, I'm going to change this symbol here and put the up volume, down volume in the overall market, which is the advanced decline line in the S&P 500. So if I'm going to be trading part of the S&P 500 or the NASDAQ 100 or the Russell, I need to understand what sectors are moving up and what sectors are moving down in the S&P 500 and which are positive in the daily range, because you're looking at the short time frame when you are positioning your trade for the long haul or the midterm account. So what we're going to do is take a look at the dollar sign, the ADVN. This is the advanced stocks that are moving in the positive direction. And if I put minus dollar sign uh, DECN, this is the declining stocks in the S&P 500. It's going to give me an overall view which are on the daily chart. You can see the trend is telling me which are moving up, which are moving down. But this is just an overall view. But what I wanted to do is here show you how to read it in a clearer picture. So I'm going to go in the style here, going to go load it up correctly, and we're going to change the time frame. Let's take a look at the breadth of the market, which is the tick, UVOL, DVOL. It's not here. Let's take a look at the basic test. Okay, let's see where it is. Da 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 da. Test AB. Let's see. Clean. Give me a second. I'm looking for it. New RSI 64. New AD. Where's the up volume? Breadth of the market. Basic, basic, basic. Beta test. Did I do the script? Okay, let's see. S&P volume tick chart. Huh, I saw we had it here. I must have deleted it, but that is okay. I will show you how to look at it in a simpler, better test. Looks like I must have deleted it. Okay, let's see. If I did, then we can rebuild it together, which is not a big deal. Okay, so let's do this together. We're going to go in the daily. We're going to go 5 days, 15 minutes, or 10 days to show you the overall market. If I see the zero line right here, and I want to go in the style, we're going to change the data. One more second. Let's just go to clean chart. We're going to go clean. So that way everybody understands the overall market. The reason why I wanted to show this, when the market is trending up or down, usually the range on the advanced decline line, which is the ADD, if I look at the zero line, if I'm off the zero and I'm trending up, I'm looking for anything above the 800 to 1500 and vice versa between the advanced decline line minus 800 to minus 1500, the trend is down. But when I am inside the range of 600 up and down, That means we're having a side market in the overall market. And this kind of gives you an overall view on those 15 minutes. So we slow down the noise. If the institutions are buying the market, you can see this. I wanted to show it this way, where it's showing you the uptrend on Wednesday. Then we had the reset in the middle of the day. This is Californian time 9:15. That means it's 12:15 East Coast, and the reset down. This was on Friday. Basically, we came in from 1500 uptrend all the way back down to the zero line, but we held the zero line, but the breath was actually but we were pushing down because the market was selling off in the overall market, and you can see that on the 15-minute bars. These are basically three soldiers heading down, and you broke the open range on that 1 hour chart. Let's take a look at it on a dollar sign TICK. Dollar sign TICK. This represents the New York Stock Exchange. And the reason why I wanted to show you this, to give you an overall view, if we look at the zero line and we mark that zero line on the chart, let's do this together. Style, load, let's see if we have them. Continue tick, dollar sign. 1 second. We're looking for it. I don't want to, stop the video and continue, but I usually don't edit them. I'll keep them going. 2 minute Nasdaq SAB. Let's see. Tick cumulative. Okay, okay. I'm going to show you the cumulative tick on the S&P 500. It's going to give you an overall view. If the trend is positive above zero, you can see that box. There's 0 to 400, 0 to minus 400, and vice versa, minus 800 to a minus 1000. Whenever we are in the minus 1000 and below, the trend is low. When the trend is up, you can see the ticks are above zero, but we didn't get really ticks closing above the 800, but we went in the 600 on that Wednesday, came back down, rallied, and came back down. You can see the bodies of the candle were below zero. Let's go to the ADD, which we had the advanced decline line. This is the same thing. ADD is equal to ADVN minus DECN. And I wanted to show you this to give you an overall view. This is the trend. You can see it going up, and eventually we fell back down. And this is giving you where the ticks are in relationship if we are above the 400, 600 to 1,000, and vice versa to the bottom. This is how of this very simple thing that you can use to understand the risk involved. Let's go now, go back to the style. We're going to go do a clean chart, load. We're going to do a clean chart. No moving averages, nothing, very simple. And what I want to do is go back to the SPX, SPY, which we had before, and I'll show you how to look at the expected move on the charts. And you can see it on the 15-minute bar between the Wednesday, because we took this example showing you the ADD. You can see that move up in the morning till we got to 9:15. It eventually sold off, correct? This is the overnight action in the European Asia market. I usually put it on. If you want to turn it off, you can. And this is the Thursday's action. When we came in on Thursday, we rallied up and the ticks were started to come in and we sold off. We fell below the Wednesday level, but we found support on the Tuesday level when the market was bullish. So I hope this is helping you. And what we're going to do is go to the Analyze tab or the Trade tab. You can analyze any instrument you want. You can put Apple, Amazon, and so on. If I put, let's say, AAPL, you'll get the, oops, if I do AAPL and I want to look at the measured move in an expected market on the SPY, Apple, the S&P, the Nasdaq, whatever the instrument is, and I want to go out 5 days for the following week. Right now, it is July 4th, so July 10th, if I take a look at from the 5th, from the 6, 7, 8, 9, 10, that would be till Friday. And I want to see what the expected move in Apple is. And you can see here, you have 308.63 on the S&P on Apple right here, but it doesn't give me the expected measured move. So if I drop this down here, it's going to give me an overall view on those 5 days where the expected move in Apple is. And how would I know what Apple is? The Apple was at 308.63 on Thursday when it closed. If I add a $9.72, it's telling you 31.15%. It can move up or down for that week. So if I need to find out how did they come up with this, I can use the delta, the buy and the sell on the delta using the ratio 17, between 17 and 16, to find the expected move on the charts. So remember, we have a $9.72 expected move from the 308 going up or down. If I look at the delta bar right here, you can see where my 17 is. If I mark it, this is my 17. You can see it. And the strike is $320 to the upside. But if I want to look at the delta coming back down and I want to look for the 17, where is my delta? This is my delta, and I'm going to look for 17. Where is 17? It's right here. It's showing me that the delta on the way down is a little bit less than 297, and the 12 is at 295. So even if I use between these two numbers, the 296.50 or between the 95 and the 2, the expected move to the downside in Apple is a little bit less than the expected move to the upside in Apple. So if I want to look at the S&P 500 like we did earlier, let's explain it and we'll look at the charts, how to look at it. This is the SPY. And now if I look at the July 10th, which is 5 days out after the Monday open, you want to do this before Monday on Friday or Saturday before Monday market opens. And I want to see what the strike price on the S&P 500. I can see that the S&P 500 closed at 744.78 cents. What is my expected move? $10.63 here, which is 14.1 of a percent. If I want to look at the delta, which is 17, we come up here. Where's the delta? And I want to look for 17. My 17, the expected move, which is right here, it's showing me 755 to the upside. But if I want to see the delta to the downside and where is my 17, I'm going to look at the delta right here. And I'm going to look for the 17, and my expected move is $732. So we have 732 and we have 755. As you can see that the delta on the 17 right here is there. If I click to buy or sell, it's going to be give me the difference between the two, between the delta and the gamma, to get that $10.63 expected move, which is 14% on the S&P 500. Let's take a look at my chart. Remember, we put the SPY earlier. We did the measurements on it, correct? So let's take a look at it on the longer time frame, how we did it on the 4 hour. Remember, I did the high and low for the week. We had an expected move of what? Let's go back and look at it on the trade tab, 755. You can see that. And the low on the delta 17, where is my 17? Right here. And the expected move is 732. Let's go back to the chart. 732, this is what the expected move, one standard deviation, and the 755 would be a 14%. You can see my machine marked it because it does the calculation for me. You can see that 754.37. This is the expected move from the 0 to 100 if I'm going to go up or I'm going to go down if the market is bearish. But if I look at this on a let's say 30-day 4 hour chart, we can see that the trend on the charts, we are creating lower highs. You can see from the top, if I draw a downtrend channel from here to here, you can see that, or to this one. It's a little bit off, but it's sufficient enough to tell me we are in that symmetrical triangle. And if I grab this low to this high, you can see that we are in the but we are in the upper distribution of that triangle. We're not halfway back in the middle of the range. And remember, this channel is coming in from 2018 highs to this area here, which we looked above, and we're trying to make a decision if there's going to be continuation or non-continuation to either side of the chart. And if I do this on a 90-day chart, 90 days, you can see that the trend is starting to compress, and we are finding that we are in that range of this consolidation. If I take a box in here, I can create two boxes, one big one and one small one. What I want to do is show you how to look at it. I'm going to mark the big box from the top down to this box down here. You can see this. This is an upper box. But if I grab this consolidation from this area here, you can see that I have two boxes and I want to edit this. I want to just grab it to the outside a little bit more so I can change the color on it, edit the property. I'm going to make it a little bit more to the greenish side so everyone can see that we are in that consolidation until we resolve either side of the market on the zero line or the up extended measured move, which would be 200% to the upside or minus 100% to the downside. I hope this is really helping you. I'm going to remove the drawing so that way remove the rectangle, and I'm going to remove this rectangle. So basically, I want you to be aware of these things when we are trading technicality. Let's do the S&P 500, which is the E-mini. I'm going to use the micro ES. If I use the ES, I'm going to show you the ES. I have a lot of lines on it, but I'm going to let you be aware of these levels and how to look at the monkey bars in relationship to the charts and the Fibonacci's and the volume weighted average point of control and understand the risk involved. So if I zoom in here, you're going to see a lot of line. This is the high for the month, last month. This is the low for the last month. So if I want to look at this levels, and you can see we are in the uptrend and that downtrend in a symmetrical triangle, but the distribution is above the federal level. When we pushed up, we are in that diamond shape when we tried to push higher. So let's see what we can do looking at the monkey bar. I'm going to go in the style. You can go in the standard. You can see there's monkey bars here. And what I'm showing you here is a 3-day, the overall range. This is the value high, which is I marked it in red, and the value low, I marked it in green. And the point of control is where most volume is. Usually Jim Dalton talks about market profile. I use the volume profile with the time spent. This is the time spent in 24 hours between the European Asia market and US, while this is where the most volume is created, and 70% of the volume, if I look at 68% of the volume, is that major range between the value high and the value low where most volume happened. And you have about 16% to the downside, 16% to the upside. It calculates the overall range. And this is the developing volume profile that happened on the holidays on Friday. So if I look at the high and low, and I measure it, my time spent is almost identical to going up or going down. If my 50% is above and my time spent lower, expected move is lower. If my time spent is above and my 50% fit from high to low is below, my expected move is to the upside. We trade either in the range, above the range, or below the range. If I'm trading below the range and I come to value low and I find support in there and I close in the first 5-15 minute here, I'm expected to go to the point of control. If there's going to be continuation, I'll look for value high. And vice versa, if I get rejection, I get out of the way. And if I lose value low, there's continuation to the downside. If the trend is coming to value low and I fall down, the expected move is lower because the sentiment is bearish, or vice versa, coming from value high, coming from to the value high and bouncing off this, the sentiment is bullish. But if I enter from value high and I close inside, I'm expected to find the point of control. But if I break above, I'm looking to continue higher. Or if I'm trading inside the range, this is what they call inside range. That means we are in chop. The ticks and the breadth of the market is more in consolidation. So I want to show you now how to look at it on a monthly bar and how to get these calculations that I have on that chart and the measurements that I have done on the charts. I have my annual volume. If you can see, this was my last month volume profile. If I do zoom in here, I wanted to show you where I mark the value low is, where the value high and the point of control. I mark them in a darker green, bright green, bigger dash lines, and the point of control for the month. But on daily basis, I'll mark the point of control that our virgin never been visited. And this is the market profile that happened in the last 4 or 5 days before the holiday. So you can see that that's developing. And if I go here to 10 days, it'll give me an overall view. If the point of control is tested, you're no longer valid. So I move it up. Once it's tested, I move it higher. Once it's tested, I move it higher, and vice versa. I move it down. This is, the Friday holiday. I'm not going to look at it, and I mark both of them. So this is the market profile for that daily chart if I'm going to day trade. Let's go here in the style. I'm going to go back to standard. And what I want to do here is show you how to read on a daily chart. I'm going to go back to the daily. And we're going to put the micro S&P 500 because it's got a cleaner chart, micro ES. And you can see in the micro S&P 500, I just have the monthly Fibonacci as well as the market profile value low, value high, and the point of control, which is the value low is in green, value high is in red, and the point of control. If this point of control is never touched, I leave it on the charts and I mark it to give an overall view where those levels are. So let's take a look here in the style. I'm going to show you different ways to look at it. I'm going to go load the volume profile on the chart, which is showing me monkey bars. This is a clean chart giving me an overall. This is not the wrong one. Hold on. Style. Sorry. We'll load it to the shorter time frame. Just go monkey bars. Monkey bars. There it is. This is the monkey bars for the annual chart on the S&P 500. What I want to do in here, I'm going to go to the style, turn off the volume profile on the bottom of the charts to make these a little bit more visible. I'm going to take the equities volume profile, volume at the bottom. The options, I'm going to take them off, and the futures I'm going to take them off to show you how to look at the volume profile. You can see that the volume profile on the chart, this is the value high, value low, and the point of control where most volume happened during this area. Where there is low volume, this is considered gaps. Usually you slice through them. This is one distribution. This is a second distribution, third distribution, fourth distribution, and this is the time spent. And the numbers, you just look at them as a color where they start and where they end according to the monkey bars. So I'm going to go now to a smaller time frame, and what I want to do is go on a 15-minute or 10-day, 30-minute chart to show you these levels in a different format. So we can see that the point of control is higher than the time spent in relationship to that 10-day range where we created a peak and a valley. That's the canyon and the valleys where most point of controls are, and the time spent high and low, as well as the value high, value low in that 68% of the profile. So let's go now, take a look at it a little differently. And what I want to do, we're going to go load. When we're going to load this, we're going to load this on a volume showing a 39-minute volume profile. And the reason why I wanted to do this, I want to show it on a 15-minute bar to show you what's going on in the overall charts. This is showing too fast. Let's go to a 5-minute. There we go. I'm going to kind of give you an overall view to kind of understand when we are trending up or down. You can use the market profile or the volume profile to show you where the value high, value low. If we look above, break in and come back down and create distribution to the downside or upside. You can change these time frames on the volume profile to help you out understand the risk involved. Let's do this a little bit more in a different consolidation. I wanted to show a volume with the regular trading hours on a clean chart. This is going to look a little bit different. What I did, I separated the overnight price action in relationship to the trading hours which are happening in the US. The gray area is the European Asia market. When the US market opens, it will show you a different distribution for the volume profile where value high, value low. It kind of gives you a reference point where the value high is, value low in the overnight, and the point of control. If I'm trading above and I enter and I close inside that volume profile or the prior day's value area high, you can see it. It sliced through, came back, sliced through the value high. I look for the point of control. And if I continue, I'm going to look for the value low and the value low in the prior day, and we continued lower, so we created a distribution at a lower area and created a B formation. And if you can look, this kind of giving you an overall view what the market is doing between the overnight, the regular trading hours, and the overnight trading hours on the charts. So I'm going to show you one other format that will help you out as well. And if you want to learn a little bit more, remember to check us out at Axel, ATRAI.com. Get in contact with us at 949-414-8484. More than happy to help. Let's go here. VPMB, Monkey Bars. Okay, YouTube, VP, RSI, MACD, 1 hour. Okay, let's do this here. Monkey Bars, 1 hour. Let's see if this is gonna work. Let's see if this is okay. This one is a little bit more cleaner. I put the 24 hours on the chart with the monkey bars overlapping. It's kind of giving me an overall view where the market profile is happening on the time span and the value low. I marked the value high was a green and the value low was like a pinkish orangey color, and the point of control is usually in purple. It marks it right here for me. So you can see where in that 24-hour market profile we looked above the prior day's point of control. When we failed it, this is developing while we're trading. We fell through it. We came to where the point of control couldn't hold it, fell right through, and came back to the value area low and sliced through this. There was continuation to the downside on the charts. So this is kind of a way to look at the market and understand the risk involved. And if I zoom it in, it's kind of going to give you an overall view. This is the overnight gray area. This is the trading hours in the US, and this is the value high, value low, and point of control. Now, if I go back to understanding just the basics on looking at a clean chart, standard deviation, what we want to do, go from here. And what I want to do is go to a clean chart. I'm not going to use any SMAs or EMAs. I just want to use this as a clean chart to show you the overall view of the market. So what we can do is basically understand that when the market is trending down or the market is trending up by looking at just the dollar sign TICK. This was the fastest one that will tell you what the New York Stock Exchange is doing in the overall market. If you can look at the zero line, where is most of my bodies? I'm going to mark them with two boxes so everyone can see them. I'm going to mark the zero line to this to the 600 so everyone can see it. And I'm going to mark this with a green color. I'm going to edit the property to kind of give you an overall view what I'm trying trying to tell you how to accomplish this. And I'm going to mark another box down here to minus 600 to show you where most of the bodies were happening. Are we trading on, if I change the color to edit the property and make it like a pinkish, more downtrend, at least you can see where most of the bodies were closing below the zero line. You can draw an uptrend or downtrend until the trend changes, and you can see the sentiment, the overall sentiment, if we are trading to the upside or downside on the charts to give you a better reference point if I am bullish or bearish without being biased. If I go to the style, I'm going to go in here in the setting. I'm going to load it. And if you want to learn a little bit more about the breadth of the market, the tick, the cumulative tick, if I put the cumulative tick up here, and the reason why I wanted to show you this, I wanted to show you when we are trending up, you can see those green dots, green triangle. When we are trending down, it's going to give me triangles to the downside and they are red, but I want to make sure that the bodies of the candle are closing below 600 to minus 800 for continuation, and vice versa if I'm closing above the 600 to 800 to the bullish side if the trend is changing. And this will give me the faster reaction if there's an uptrend or a downtrend. You can draw a downtrend channel on each one to give you an overall view if the trend is up or down. The reason why I marked this, I wanted to show it to everyone so everyone can understand. See, if I take the green, you can see most of the bodies in the trend was down. We had a couple of moves up in between, but the bodies were very barely up here. Then we started to change the trend. It went to green. Then we sold off, and then to the close, they tried to push it back in, and we kind of closed right in the middle of that range on the S&P 500. Let's go here, remove this drawing, go back to a clean chart, and I want to do the SPY, and I'll use the SMA moving averages. and we're going to go to SPY. And the reason why I wanted to show this, we can look at it when we were trending down. You can see that big move down, and eventually we started trending up. This is telling us where the trend is and if there's a change in the sentiment in the overall market. I hope this video was helpful. If you'd like to learn a little bit more, once again, get a hold of us at 949-414-8484, or you can reach me at joe.f@axelatrai.com. I hope enjoy your 4th of July. Be safe out there. Look forward to seeing you on our Discord channel. Over and out.